Hello viewers and my dear students. Welcome to my channel. I'm Hasham. Already 6 problems we have completed on computation of income from house property, and in this video I'm going to start with 7th and 8th problem. 2 problems I'm going to cover up in this video. So if you are regularly watching all the videos on computation of income from house property, right now you will be in a position to solve the problem on how to compute the income from house property according to the provisions of Income Tax Act. Now, 7th problem. Before starting the 7th problem, I expect my viewers to have a printout of the problems which are given in the link under my description, and take a screenshot of the solutions of 7th and 8th, then I'll explain. Come on, see the 7th problem. Sri P.S. Reddy is the owner of a house property. So SSC P.S. Reddy, consisting of building, open land for car parking and kitchen garden. The building is let out for residential purpose on a monthly rent of 18,000. This is the actual rental value. Municipal valuation 1,80,000 MRV. And rent of similar building 20,000 per month. This is the FRV. We are not given the SRV. So the house is not governed by Rent Control Act. The open land is let out on a monthly rent of 5,000 to run a car parking business. That means he has let out building and open land separately. The building is let out for 18,000 per month and the open land is let out for rupees 5,000 per month. So according to the provisions of Income Tax Act, income from house property, only income from building will be taken under income from house property. Income from open land is taxable under income from other sources. The open land is let out on a monthly rent of 5,000 to run car parking business. During the previous year, the house was vacant for 1 month. So there is a vacancy period of 1 month. So out of 12 months, 11 months it was let out, 1 month vacant. The rate of municipal tax is 15% of MRV. He constructed the house by raising a loan from HDFC for the interest, and the interest paid during the previous year is 12% on the outstanding amount of 2 lakh. 2 lakh rupees loan amount outstanding. On that 2 lakh rupees, 12% rate of interest paid. That will be allowed as deduction under section 24B. And the other expense are fire insurance premium, ignore, collection charges, ignore, repair, ignore, ground rent, ignore, brokerage paid to raise the loan, ignore, not allowed as deduction. From the assessment year 2002-2003, only 2 deductions are available, 24A, 24B. Before 2002-2003, all these deductions were allowed. So presently in working note, you should write down, no deductions are allowed for fire insurance, collection charges, repairs, ground rent and brokerage paid to raise the loan. Compute income from house property. That's it. It's very easy now. Sri P.S. Reddy, computation of income from house property. Format as usual, you have to copy it down. Amounts afterwards will take. First of all, format will remain same. First, gross annual value, less municipal taxes, then net annual value, deductions under section 24, standard deduction 24A, and interest on loan taken 24B. That's it. Now GAV. In this problem, standard rent is not given. The house is not governed by Rent Control Act. Only 3 values are given: MRV, FRV, ARV. But there is a vacancy period of 1 month. So whenever there is a vacancy period, we have to calculate adjusted ARV. Adjusted ARV. How to get adjusted ARV? Take the actual rental value for 12-month period. Actual rental value for 12-month period minus vacancy period rent. How many months vacancy period? 1 month. That will deduct. So before that we calculate ERV. ERV is higher of the following two: MRV, FRV. So ARV, rent of 12-month period is 18,000 per month into 12. 2,16,000. Vacancy period rent 18,000. The ARV is 1,98,000. This is called adjusted ARV. Now ERV is higher of the following two: MRV 1,80,000, FRV 20,000 per month into 12, 2,40,000. Whichever is higher, 2,40,000. So ERV is 2,40,000, but adjusted ARV is 1,98,000. So there is a provision in Income Tax Act. If the ARV is less due to vacancy period, ARV is less than ERV. ARV is less than ERV due to vacancy period. In that case, GAV is equal to ARV. GAV is equal to ARV. So how much is ARV? 1,98,000. Should not take 2,40,000. Because 1,98,000 is less on account of vacancy period. So here ARV is less than ERV on account of vacancy period. So GAV is equal to ARV, 1,98,000. Municipal taxes are given in the problem 15% of what? MRV. MRV is 1,80,000. 15% 27,000. Deduct NAV 1,71,000. NAV. Now standard action 30% of NAV. 30% of 1,71,000, 51,300. Interest on loan taken to construct the house under section 24B. That is given in the problem. 2 lakh rupees loan amount outstanding at 12% rate of interest given in the problem. 24,000. Take the total 51,300 plus 24,000, 75,300 is a deduction. Now deduct 1,71,000 minus 75,300, 95,700 is the income from house property. That's it. And rent from open land. Rent received from open land is taxable under income from other sources. It is 5,000 per month into 12, 60,000. That's all. So this is the end of problem number 7. Now problem number 8. On 2nd April 2020, Mr. Kiran purchased a residential house in Bidar for rupees 27 lakh and he took a loan of 18 lakh from Karnataka Housing Corporation at 9%. So interest on loan will be allowed as deduction. Compute the income from house property for the current assessment year. The municipality has fixed the value at 98,000. This is MRV. The FRV is 1,05,000. He has let out the house for residential purpose. During the previous year, the house was vacant for 2 months. That means actually rent is received only for 10 months. 2 months completely house was vacant. He paid the following expenses: repair, ignore; ground rent, ignore; municipal taxes 4,500 allowed as deduction; correction charges, ignore; interest on loan is due but not paid. When interest is due, then also interest will be allowed as deduction. There is difference between municipal taxes and interest on loan. Municipal taxes, if it is paid, it will be allowed. If it is due, not allowed. But in case of interest on loan, whether paid or due, both will be allowed as deduction. So even if the SSC has not paid the interest on loan, then also interest on loan will be allowed as deduction. So in working note you should write on. So in the notebook also you write on whatever I am saying, that interest on loan will be allowed as deduction even if it is not paid. Then actual rent received during the year 1,80,000. Actual rent received for how many months? 10 months. Because during 12-month period, 2 months the house was vacant. So only 10-month rent is received. So 1,80,000 actual rent received given, that is for 10 months. So per month how much? 1,80,000 divided by 10. You will get 18,000 rupees per month. That is the actual rental value. Now, in this problem also, there is vacancy period. So we have to calculate adjusted ARV, just what we have done in the previous problem. Now, Mr. Kiran, computation of income from house property, GAV, municipal taxes and NAV deductions we have taken. Now working out. Calculation of GAV. First we calculate ERV. ERV is higher of the following to MRV and FRV as usual. MRV is 98,000 given. FRV is 1,05,000 given. Higher 1,05,000 ERV. Now we calculate adjusted ARV because there is vacancy period. So adjusted ARV, actual rent received for 10 months is 1,80,000. So monthly rent is 1,80,000 divided by 10, 18,000. Monthly rent. Now adjusted ARV is equal to actual rental value for 12 months minus vacancy period rent. Actual rental value for 12 months. Monthly rent is 18,000. So 18,000 into 12, 2,16,000 is the actual rental value for 12 months. Minus vacancy period 2 months. So 18,000 into 2, 36,000. So 216 minus 36, 1,80,000 is the adjusted ARV. Now in this case, adjusted ARV is 1,80,000, whereas the ERV is only 1,05,000. So adjusted ARV is more. Then in that case, adjusted ARV is the GAV, or GAV is higher of the following three: MRV 98,000, FRV 1,05,000, adjusted ARV 1,80,000. Whichever is higher, 1,80,000 is the higher. GAV is equal to 1,80,000. Municipal taxes given in the problem 4,500. Deduct 4,500, 1,75,500 is the NAV, net tangible value. Deductions under section 24, 30% of NAV, 50 to 650. Interest on loan taken to purchase the house. Even if the interest is not paid, it will be allowed. So 9% of 18 lakh, 1,62,000. Now take the total 50 to 650 plus 1,62,000. It comes to 2,14,650. These are the deductions. Now 1,75,500 minus 214,650. You are getting negative figure. Minus 39,150. Negative. That means loss. Loss from house property 39,150. Now in working note I have not written. You write down better. In examination also working notes are compulsory. Interest on loan, even if it is due, it will be allowed as deduction. It will be allowed as deduction. So here on account of vacancy period, still the adjusted ARV is more than ERV. So adjusted ARV is the GAV. Adjusted ARV 1,80,000. That is the GAV. That's it. So we have completed 8 problems on computation of income from house property. Every problem only 1 or 2 new points are there, remaining all points are same. So inshallah we'll continue the next problem in the next video.